Mainz and Money 2018 in London here, and with me now is NQ Minerals, Roger Jackson, Executive Director of the company. And exactly 1 year ago we did the last interview, so it's time for an update. Roger, good morning.
Good morning, Jochen.
Yeah, great to have you here. Thanks for taking the time. NQ Minerals, we were last time talking about that you want to go in 2018 into production. So did that work?
Sure.
Oh, lovely.
Yes. No, we're now into production. We produced our first lots of concentrate in September, and we produced a lead silver gold concentrate, which we've subsequently shipped to the port, and we've sold our first lot of concentrate at the end of October and received the money in the bank.
Yeah, that's even more important.
In November. So,
yeah,
yes.
Fantastic. Can I ask how many tons of concentrate you have shipped so far with the first?
Look, it's only a couple of thousand tons. It's early stages.
Yeah, but it's money, you know.
But, and we're in the commissioning phase. Sometime in January, February, we'll be fully optimised and making the concentrate that we had in our specification from the start.
Okay.
But yes.
Fantastic. You're working in New Zealand, correct?
No, Tasmania.
Tasmania, sorry,
Tasmania.
Excuse me. Yeah.
It is an island off Australia.
Yeah, that's right.
Close.
Sorry for that. little of geographical lacking. Yeah, but I mean, do you sell them then to China, or where is it going?
Well, look, we've got an offtake agreement with Traxys, Traxys in Europe, and they. It's their prerogative to sell where they wish to.
Of course,
We actually sell to them on a fortnightly basis, whatever concentrate we've delivered to the port, and so and we get paid on spot market. So it's their prerogative. But sure, it may go to China. But there's other destinations. In fact, there's a lead smelter in Tasmania itself, and there's a zinc smelter in Tasmania, and a lead smelter in Port Pirie in South Australia.
Oh, fantastic. So you're well set up location-wise and infrastructure-wise.
Yeah, it's a perfect place for those two concentrates to be sold if need be. We're already set up with a train line that runs directly from our mine, our concentrate shed to the port, and we've got a very good port facility to load reasonably large shipments, and we can take it wherever we like in the world.
So it's like a deep water port.
It's a deep water port.
Yeah, that's important for large vessels.
Yes.
So bulk vessels, of course.
Yes.
Yeah. Okay. Super. The mine is in Tasmania. You're in the commissioning, of course. When do you expect? I know it's a forward-looking statement, but when can we expect full commercial production?
Well, we're phasing now our lead commissioning, then we'll move into the zinc, and then we'll move into the gold, silver pyrite, but sometime in January, February.
Oh, that fast?
Yes.
Oh, wow, so that's Q1 already.
And look, I think with these sort of things, you're optimised for as long as you just keep optimising, because you try to squeeze as much out of the rock as you can.
Yeah, of course. Perfect. Let's assume commercial production works very well by end of Q1. Okay. Does the margins look what you have designed in the mine plans?
Sure.
Meaning the costs are under control?
Sure. Look, this is a very low-cost producing project. It's a tailings project. We use a dredge to remove the material. We actually move that material from the tailings dam to the plant for $2.80 Australian. So that's very, very cheap per tonne. So then we put the material through the plant at a very low price as well. It's a very, very high-tech plant. It's fully automated. We only have 2 actual operators running the plant on any shift.
That's really lean.
Yep. And we've got a great infrastructure for transport to the port. So we're as low a cost as you can get. And of course, we've got that a fully set up and low cost mining or staff who are all local. They just drive in, drive out, so we don't have fly-in, fly-out. So our labour costs are cheap. So we've got gross margins of about 53%. So it's very good.
That's before taxes.
Yeah.
The 53.
Yeah.
Oh, that's a lot of money.
Yeah.
Jesus.
No,
nice. So once you're on full production, what can we expect production-wise, let's say tonnage-wise, as you're doing like 3 concentrates, right?
Yes.
So what would be then the full capacity for the year?
Okay, so the first year we're going to run it at 3/4 pace. So
of course,
we're putting through about 700,000 tonnes a year, but we'll move up to 1 million tonnes a year by probably halfway through 2019. And that's about our full capacity, and we'll be running that for 10 years.
For 10 years, okay.
Yeah.
What comes after those 10 years?
Well, we've got an empty tailings dam, and we've got a very good mill, and we sit on a very good lot of high-grade VMS deposits. So, we'll start again.
There's
we'll
room
go
to do
rock
some
mining.
more.
Yeah.
Fantastic,
Absolutely.
great. No, that is a fantastic thing. So what? Let's talk a bit about the financial structure of the company, because it's also important. Do you have, let's say, a lot of debt? How many shares are outstanding? What has management skin in the game?
Okay, so as far as the debt goes, we've got about 40 million or 45 million pound of debt, and we've got.
To what interest rate?
Look, it's reasonably expensive because to get this project off the ground, we did it all by debt, and anyone that's going into a new project wants a bit of return. Yeah. And we'll look at that debt and refinancing over the next 12 months, and probably on a longer term, because it's all short-term debt financing. But in the second question, I guess we're running at about 300 odd million shares at the moment. The management and directors own about 35-40% of the company.
Oh, that's a lot.
Yes.
Wow. So you have a high interest that little baby flies.
Yes.
I would
and
say.
we're all motivated to make this work and work well.
Yeah.
Yes.
Super. Perfect. No, that's great. $45 million of debt seems to me really manageable, given the full commercial terms you are having. So what would be the revenues?
Put it this way, our EBITDA line is around 40 million US every year.
That's what I thought about. Yeah. Exactly.
So it's very manageable.
So you probably could also say, let's say in 2020, 2021, you pay it back.
Well, we could, but that's. Does anyone pay back their money too early? No. We try to make other things work and add value, to our own project and to other projects that we're looking at the moment. And it's all about shareholder value.
Exactly. No, I mean I see it more from, let's say, from the risk aversion side, because when you have the EBITDA to, let's say, hypothetically almost pay back the debt within 1 year.
That's right.
It takes a lot of pressure out of the company and also from the management.
Absolutely.
Because you cannot be squeezed.
Absolutely.
Yeah, because you always can say, you know what, here's the money.
Yeah, cash is king.
Exactly, that's the point. Given the idea, the debt is managed, let's say you have paid some back, could shareholders imagine a dividend in the future?
Yeah, look, we are considering it.
Would be your interest too, right?
That's right. That's right. Look, a dividend is definitely on our mind, but we haven't officially, made any decisions on that. But it's we want to get into production.
You have to go really in full commercial production before we talk about dividends. But you have it in your mind, and that's important, I think, also for maybe people who look at your company and want to do an investment decision.
Yes,
because dividends is also always something. It's beautiful to have in the bank account.
That's right.
Right?
Yeah.
Perfect.
Absolutely.
So. What would you say is a major challenge for you 2019, or a major issue you could see coming up, or let's put it that way, what do you see as a major risk in 2019?
Well, look, everyone's always looking at what base metals are doing. They're sort of everywhere at the moment. Fortunately enough for us, we're such a low-cost producer, we've got a lot of room to move as far as and downward movement. Won't hurt us for a long while. But the commodity prices is always something on your mind. And look, I guess from our point of view, we understanding what China's going to be doing in that, whether they're going to be able to take products is probably a risk. But look, there are many other places you can send concentrate to.
Absolutely.
And as I mentioned before, we've got 2 smelters in Australia that would take our product. But they're probably the main risks for us.
Okay, perfect. I mean, also, it looks to me like you are in the right metals for sure, because silver is, I think, in high demand from next year onwards because of the solar story in India and also, in China and in Saudi Arabia. Yeah, so I see there much higher prices. Zinc is important, we know, for batteries in the future also. Gold, I think. Production is going down still for next year, also prognosed. So from that side, lead, etc., those are all metals which I think are coming back in favor.
Well, look, we've got a perfect hedge there across the board. usually they balance themselves out. Of course, we're also working in US dollars, but Australian conversion at the moment, we've got an excellent conversion from Australian dollar to from the US dollar, and we also, I guess, we ship in US dollars, but we're not paying for the shipping. It's all sold FOB and through Traxxas, so we don't have that exposure.
Perfect.
So we've got an FX hedge there as well. So no, we're pretty happy with that also balancing itself out going forward.
Fantastic. Well, Roger, thanks for the update. It was terrific. All the best for 2019 then, and please show us in Q1 that the commercial production is declared.
Great.
I would say.
Thanks,
Great.
Jochen.
Thank you very much.
Thank you. Bye.
Yeah, ladies and gentlemen, it was Roger Jackson, the Executive Director of NQ Minerals. And you heard it, the production has started. They are in the ramp-up phase. So in Q1, there shall be declared commercial production. $45 million in debt. I think that's reasonable and it's manageable, of course. They want to refinance that next year to lower interest rates, which makes absolutely sense. And as he said, 53% as a gross margin, meaning a margin before taxes. That gives a lot of room, even at those lower base metal prices we see, and also low silver and gold prices. And for next year, it's all set up to probably move a little bit higher. So the company makes money and they want to pay a dividend in the future. Management has 40%. Skim in the game, that's what we like. Check it out. Thanks for watching us. Merry Christmas and bye-bye from London.